This is the Asia Trade. I'm Haidi Stroud-Watts alongside Paul Allen here in Sydney. We do have some breaking news when it comes to this just crossing the Bloomberg. The US will be revising its visa criteria for all Chinese and Hong Kong applicants. And this, of course, as we've been continuing to watch the Harvard drama as well, the pushback on foreign student visas. And the big question has been whether or not that will progress and be expanded beyond just Harvard University. Hearing from Marco Rubio now saying that the new visa policies will put America first, not China. Under Trump's leadership, the State Department will work with Homeland Security to aggressively revoke visas for Chinese students, including those with connections to the Communist Party or studying in, quote, critical fields. They'll also be revising visa criteria to enhance scrutiny of all future visa applications for the People's Republic of China. So also posting on X that the students affected would include those with connections either in these critical fields or with the Communist Party. Comes just a day after Marco Rubio also ordered US embassies worldwide to stop scheduling interviews for student visas as the Trump administration continues to weigh stricter vetting of applicants' social media profiles as part of that application process too. It's also interesting, we did also hear from Beijing just overnight saying that there should be no disruption to education and really urging the US and the Trump administration to protect the rights of international students. So we'll continue to wait to see if we get a reaction from Beijing today, particularly in the context of this ongoing trade war détente. Let's get you to the markets, and there's a lot of cross currents for these markets to be watching at the moment, both from, of course, not just geopolitics, but of course some of the news flow when it comes to Nvidia as well. We've seen some to and fro when it comes to US stock futures gaining at the moment as we saw those strong results from Nvidia. But at the moment we are seeing a pretty positive open as we get into the start of trading in Sydney in just over an hour's time. Nikkei futures looking like this, 0.8% higher. Watching dollar yen sitting at that 145 handle, but of course lots of question marks as to the longer term trajectory, Paul, when it comes to where the US dollar goes and how that potentially continues to benefit Asian currencies to the upside.
Well, let's take a look at how US futures are shaping up. And of course, this is one to watch after the Nvidia results, because we did see the major US indexes a little bit weaker before those results came out. We'll get a bit more on them in a moment, but essentially Nvidia coming in line with estimates there. And we're seeing futures bouncing pretty positively as well. Nvidia higher after hours also. Now, a few other things to watch. We did have solid investor demand for the Treasury Department's $70 billion auction of 5-year notes. 78% of that was taken up by bidders, drawing a yield of just over 4%. So that was encouraging for bond markets. We also had the Fed minutes as well, officials agreeing that heightened economic uncertainty justifying patience on rate adjustment. A little bit of concern there that the tariff environment and that uncertainty could push up unemployment and potentially inflation as well, Heidi.
Paul, let's get more on that Nvidia story, because we did see those shares climbing in after hours trading after giving an upbeat revenue forecast, even as the slowdown in China weighed on those results. Our Bloomberg Technology co-host Ed Ludlow joins us now for more. Ed.
Yeah, I mean, the question is simply, where did Nvidia make up for the opportunity lost in China? $8 billion of lost revenue because of the H20 write-down and the export controls that are in place. Jensen Huang answered the question. It largely came from demand for other products, but clearly China is top of mind for this CEO. Listen to what he told me just a few moments ago.
Well, we got a whole bunch of engines firing right now. The biggest one, of course, is the reasoning AI inference. The demand is just off the charts. You see the popularity of all these AI services now, ChatGPT, Gemini, so on and so forth, Grok. I mean, they're just doing incredibly well across the board. And all of the APIs that they serve out and all the agentic AI services that are built on top of them, they're all doing incredibly well. I think that there's just a giant breakthrough in AI's capability, and inferencing has just become a giant workload. Second, people realize that Blackwell is just a home run. NVLink 72 is a home run architecture. We designed it to be a thinking machine, a reasoning AI system. And I think people now, the confluence of the breakthrough in reasoning AI and the availability, now the emergence of Grace Blackwell, NVLink 72, perfect timing. I think that's at the core, a big part of it. And the second part of it is that our supply chain is growing and we're really ramping it up, and they're doing fantastically for us. And so all of these things are all coming together.
And so it is fair to say that some of that additional supply on Blackwell and the demand for Blackwell kind of made up for the opportunity lost in China, at least in the outlook for this current period?
Yeah, I guess so. But, you can't underestimate the importance of the China market. This is the second largest AI market. This is the home of the world's largest population of AI researchers. And we want all of the world's AI researchers and all of the world's developers to be building on American stacks. And so, irrespective of the near-term revenue success that we have, we can't ignore the fact that the Chinese market is very important.
You explained, again, in some detail, that at least in the Hopper architecture, you have engineered down to the lowest spec possible. It's not possible to do anything different with Hopper for the Chinese market. But in your consideration for a different architecture or a chip for the Chinese market, is that what we're talking about, a new design or new class? And have you made that proposal to the administration, just designing from the ground up a new chip?
We're still thinking through that. They're just the limitations are quite stringent, quite limited, if you will. H20 is as far down as we could take a Hopper. We don't know how to make it even less, and so that's really the limit. So there aren't main, the limitations are quite stringent. So we have to really think through it. Whatever we make ultimately has to add value to the market.
All there is to add is that Jensen Huang said that China's leading AI companies are already looking to alternatives. Huawei, which he said has products, GPUs, accelerators that are already as performant as Nvidia chips, not just H20, but classes above that. Haidi, you have some breaking news.
We do, and this pertains to the really sweeping tariffs that President Trump has imposed on multiple trading nations. The Court of International Trade has ruled against President Trump on these tariffs. His global tariffs have been blocked by the Trade Court. The federal court has said that Trump has exceeded his authority-imposed tariffs under the IEEPA authority, so blocking Trump from imposing these sweeping tariffs on imports under emergency powers. This was a lawsuit that's been on foot since early May, and the US Court of International Trade have been hearing arguments challenging Trump's tariffs. They were filed by 5 domestic businesses arguing that the law that Trump invoked to impose his so-called reciprocal tariffs does not actually give him the power that he claims. So we've seen that pushback now from the Federal Trade Court, the US Court of International Trade, blocking Trump's sweeping tariffs under these reciprocal tariffs that he's sort of been using under emergency powers. So this could have meaningful implications when it comes to the trade war, Paul. We're seeing the reaction when it comes to the yen decline and other market assets as well at the moment.
All right, let's get a little bit more on this. Garfield Reynolds joins us. Garfield, we're already seeing futures ticking a little bit higher off the back of this news. What sort of response could this provoke in markets?
Never dull, is it?
No, it's never dull. It's never dull. There I was actually thinking that perhaps the thing that might disrupt markets today was Marco Rubio talking about revoking China student visas. But no, not at all. That's old news. That was 5 minutes ago. Yeah, exactly. No. So, I mean, it's a double-edged sword here for markets. On the one hand, the idea that Trump will not be able to impose tariffs in the way he has, that's obviously good for equities that are still lower than they were at Inauguration Day, and most of that is because of concerns about tariffs. Problem is, of course, how will the Trump administration respond? This is a particular court, the Court of International Trade, now I may be in error here because I haven't been able to read in fully, but my understanding is this is a case that was brought by a group of small businesses who have said that the tariffs represent an existential threat to them because they can't get by without imports, and even if you are going to acknowledge the idea that these tariffs will force alternative manufacturers to set up in the US, by the time they do that, these small businesses will be out of business. So that's their thesis. The court has upheld that, says that Trump doesn't have the authority. Undoubtedly, this will be appealed, to the higher courts. You could have, we have already had the sight of the Trump administration declining to, well, being criticized for not properly acceding to what the Supreme Court has asked them to do when it comes to deportations, claiming that you cannot get in the way of the president's exercise of his foreign policy powers. Perhaps, I'm no legal expert, perhaps the Trump administration will make similar claims here. So we could get a lot more volatility, seeing as Trump has been so very, very determined that tariffs are a key part of his policies. So will he stand by and let the courts tell him he can't use it? He's certainly going to fight this. Where that fight takes us could end up being a much darker place for risk assets than the simple idea that the tariffs are going to go away. For today, especially with Nvidia having already supplied a solid lead, I would expect that equities will rally at least until, with as ever the concern that we could be one or two tweets away from some more volatility.
In the meantime, though, there's so many other cross currents because, as you say, adding to the complication is that President Trump has, at least in a temporary sense, walked back a lot of these tariffs. There's a number of pauses on hold with China, ongoing trade discussions as well. The murkiness is just quite extraordinary, isn't it?
Oh, it's extremely extraordinary, and that's part of what I was talking about with that ancient history area where the revocation of Chinese student visas, the reports from the FT that the Trump administration is pushing or telling a range of US chip software producers not to export things to China. Nvidia's concerns about how it can't export chips to China. All of this is underlining that US-China relationship remains a difficult one. Investors have been operating on the assumption that the current 30% China tariffs are, a kind of a ceiling that might come down, but it should probably be better regarded as a floor that's not going to go away, and there has to be concern that it could go higher. You also wonder how willing China will be to compromise with the US when it's getting this sort of pushback. So that is a major concern. The uncertainty, the difficulty in being sure. Remember, it's less than a week since President Trump came out and said he was going to impose 50% tariffs on the European Union, and then took that away. So that's a feature, even if we might wish it was a bug of the current environment. The other thing that I just really quickly want to mention, because I thought of it, in amongst all this, the other risk that's looming over markets is what does this decision do to bonds? If you think tariffs are going to go away, and if you think that means that US growth is going to rise, it's unlikely that this would move the Fed to resume rate cuts as things are now. So if you think that growth is going to be better, does that mean that yields go up? We barely escaped yesterday without major fallout from Japan's rather difficult 40-year auction. So global bonds are on something of a knife edge if this sets off a sell-off, if this sets off strong buying of equities and strong selling of bonds. That could also lead to some fresh disruptions out there.
All right, never a dull moment. Garfield Reynolds, who leads our M Live coverage in Asia. Thanks so much for joining us. Still to come, we're going to get the outlook for New Zealand's economy. We're going to speak to RBNZ Governor Christian Hawkesby. It's his first broadcast interview with international media. Much more ahead as well. This is Bloomberg.
Just getting back to that breaking news, the Court of International Trade has ruled against the legality of President Trump's reciprocal tariffs. They have been blocked by this US trade court, saying that the global tariffs are deemed illegal, dealing really a major blow to a key pillar of the trade and geopolitical policy that we've seen from the Trump administration, the Republican economic agenda. That ruling, I should note, obviously can now be appealed by the administration in federal court. We'll wait to hear more details on that. But this has been a major legal hurdle as the Federal Trade Court has been hearing this challenge, a lawsuit that's been brought forward by 5 domestic businesses arguing that the emergency laws that Trump invoked to impose these tariffs doesn't give him the power that he claims. It's been a busy morning because we've all had the administration revoking visas for Chinese students and plans to enhance scrutiny of all future visa applications from China and Hong Kong. Let's bring our China correspondent Min Lo in Hong Kong. You know, this sort of started with the Harvard story, and there's been concerns that it's going to be broadened to, other countries and other types of visas. And now we're hearing a specific targeting of visas from applicants from Hong Kong and Greater China.
Yes, and the Secretary of State Marco Rubio posted on X essentially saying that China will, quote, aggressively, the US rather, will aggressively revoke student visas from China and also revise future visa criteria for people from Hong Kong and China. And they're particularly targeting students with ties to the Chinese Communist Party or that are studying critical subjects. And you can imagine this is something that Chinese parents and students will be very closely watching. Huge impact, both in terms of economic impact and cultural impact. Concerns around the soft power of the U.S. Because bear in mind, many of these students, they typically pay full fees to U.S. universities, a source of revenue for these universities that are then able to subsidize or provide financial aid to U.S. citizens. And the existing visa procedure is already very tight. Students are being screened for not just their academic credentials, but also their financial capabilities, their intent to return to their home country after completing their studies. And it'll be interesting to see whether the federal court will be able to intervene as well, because with the Harvard case, the court was able to temporarily block the U.S. attempt to prevent Harvard from accepting or enrolling international applicants, at least temporarily. So what happens next? Definitely something to watch. And many of these students last year, in the last academic year, the U.S. actually admitted over 1 million of these foreign students. India is a primary source and China is the second. Many of them are there to study things like science, tech, engineering, and math.
Min, also just quickly, Bloomberg's learned the Trump administration is moving to restrict the sale of chip-designed software to China. So what do these new curbs mean for China's chip industry?
Yeah, so the U.S. Commerce Department had sent letters to some of the top players when it comes to electronic design automation, or EDA. And the 3 companies that are really in focus here, they are the big players that contribute to 80% of China's EDA industry. They are Cadence, Synopsys, and Siemens. Some of these companies saw their shares really declining by 10% or so overnight. We want to keep a close eye on some of these Asian counterparts like Samsung and how they will fare this morning. Certainly a big hit to China's ongoing chips sector development.
All right, Bloomberg's China correspondent Min Lo there. We have more ahead on the Asia trade. This is Bloomberg. Let's take a look at how New Zealand assets are tracking. We've got the local index a little bit softer at the moment, off by about 0.2%. The Kiwi dollar pretty much where it was, perhaps a little bit stronger following yesterday's decision to further ease the cash rate in New Zealand. That was very much in line with what we were anticipating. And in his first international broadcast interview now since taking charge at the Reserve Bank of New Zealand, we're joined by Governor Christian Hawkesby for more on that latest cut and what lies ahead for the economy. Governor, thanks so much for joining us today. I just want to start by asking you about some of the variables that you've been discussing around the external environment, particularly US tariffs, which now may be off the table again, how China might respond to support its economy. What are you considering when it comes to the path ahead?
Good morning. Thank you. Yeah, so the global outlook has just played a really important part in our assessment. We think New Zealand's in good shape at the moment. We have high agricultural export prices. We have interest rates that have fallen a long way, and that's really underpinning an economic recovery that we're experiencing. Facing into that is the global uncertainty, and so that played a big role in our thinking. I think for us it means a much more modest recovery than otherwise, particularly through the impact of slower global growth on demand for our goods and services overseas, but also more generally the impact of global policy uncertainty. And we think that that's going to be an important factor or drag on activity and inflation, regardless of where these tariffs land. It's just the fact that there is so much uncertainty, there is so much toing and froing that it really does erode confidence in businesses to invest.
I'm just wondering if you can tell us a little bit more about potential easing bias as well, because you say you don't have one, but at the same time, you've got updated forecasts showing the cash rate coming back to 3%, possibly even 2.75%. So can you tell us a little bit more about those forecasts?
So we have a long history of providing projections for the economy, and that includes for the official cash rate as well. What those projections are, we've revised those down from February, so reflecting that sort of weaker global demand and weaker inflation pressures here in New Zealand. As you mentioned, that track is broadly around 3%, give or take. However, we also published this time around, for the first time in 5 years, 2 different alternative scenarios, just reflecting the uncertainty and risks ahead of us, and what they show is that there are many different paths that the official cash rate could take from here, depending on how things play out internationally and domestically. But we're in a really good position to navigate those.
There's a lot of flexibility in that path forward, it seems, both with, the sort of withdrawal of bias as well as the forecast. Does that mean we could, equally, depending on the data, see a pause, a hold, potentially even a hike?
Well, the main message we were looking to get to markets was that, when we next meet in July, a further cut in the OCR is not a done deal. It's not something that's programmed in. We've moved a long way. We had the official cash rate up at 5.5% in last year, and we knew that we were well north of neutral settings. If neutral somewhere between 3.5 and 2.5, we're in that zone now. So we're really more in a phase where we're taking, considered steps, data dependent. The markets need to follow developments really closely to get a feel for what it means for us.
You talked a little bit about the detrimental effect of the external uncertainties, the tariff war on investment expectations and willingness and business confidence. How sort of permanent do you see that impact potentially being, even if tariffs are reversed, on both that confidence and also on sort of more entrenched inflation expectations?
Material, I would say, absolutely. We've looked at different, scenarios for what different tariff outcomes could be, but even just the way that tariffs the different way they could affect the New Zealand economy. In the document, we lay out a special topic that has all the different channels that the tariffs could work through. Some of the most clear ones are through weaker demand for us domestically and that hit to confidence. We think that those channels will be working sort of regardless of where these tariffs land in the end. So that's going to be an impact on us from a cyclical perspective. From a structural perspective, on the other side, the risks really lie around the damage that all this does to international trade, in the sense of trust and confidence in different countries with each other, supply chains, how those get disrupted, how effectively the global economy gets reconfigured in a way that may add extra inefficiencies and extra costs into those supply chains, and that's a potential upside inflation risk for us.
Governor, you also had a rare vote on the policy committee. I understand that's only the second time that's happened since the committee was formed. How significant was that? Do you expect to see more? And are you more open to holding votes than your predecessor, Adrian Orr, was?
So thanks for asking that question, because we do have quite a unique governance approach. And so we are tasked with seeking to make a decision by consensus every time that we meet. And so our process is very much designed around how to deliver that. And it means that as a committee, when we show up to our monetary policy committee sessions, which run for a week and a half into these quarterly decisions, we need to do that by, joining with an open mind, listening, learning off our colleagues, getting the same analysis from staff, and therefore building a common picture together that guides us towards a consensus. Over the last 6 years that the committee's been in place, this is only the second time that we've had to vote. The first time being when we were quite close to the peak of the OCR 2 years ago, and now as we're towards more of a turning point or inflection point again. So for me, it reflects partly the part of the cycle that we're in. It reflects part of the uncertainty that we're facing, but also just good, healthy dynamics within a committee.
And as you say, the OCR is now neutral. What would you be looking at if you potentially see the need for stimulus or more stimulatory policy settings?
That's right. We've moved a long way, but we're still only at neutral. And as we know, interest rate cycles can have wide ranges around them. In the alternative scenarios that we set out in the document, we have one where inflation pressures come through more strongly, and that's one where the official cash rate doesn't go down much from here and heads north. In the one where global demand impacts New Zealand more fulsomely, we have the official cash rate at around 2.5% or lower. These scenarios just capture one dimension of the uncertainty that we're facing at the moment. So I think it's very plausible that the official cash rate could again be, some way away from 3%, depending on the way things pan out from here.
Governor, really great to have you with us, and we appreciate your time. Reserve Bank of New Zealand Governor Christian Hawkesby there joining us. And we do have another central bank decision that we're tracking in Asia this week. Bank of Korea today widely expected to cut its benchmark rate in the next hour. The central bank looking to shield the economy from both domestic risks as well as global risks stemming from the US tariffs. There are also just days to go before a pivotal presidential election. Bloomberg's Korea economist Jen-Hsun Huang joins us now from Seoul. So this is pretty much a done deal, but there are sort of factors that would limit how much free rein there is in easing. Household debt is always an issue. There's a lot of domestic risks there as well.
Hi, Heidi. Thanks for having me, first of all. That's true that BOK is cutting interest rate 25 bps today. Is a almost done deal. But there's a concern that the Bank of Korea has a concern that too much easing or too rapid easing could worsen the financial stability risk with a high household debt. And Bank of Korea also worries that the housing bubble in Seoul area could be reignited under a low interest rate environment. So Bank of Korea would take a more cautious approach. So I think BOK would cut 25 bps today, but it will take more time for its future easing.
As Heidi mentioned, there is an election very close now in South Korea. How could the spending plans of both candidates change the picture for the Bank of Korea going forward?
So, the Bank of Korea is independent central bank, so the political event itself could not affect directly a monetary policy decision. But as you mentioned that their implications for macroeconomy could affect the central bank's monetary policy. So the two leading candidates, Lee Jae-myung of the Democratic Party and also Kim Mun-soo of the People Party, two candidates both pledged that they will implement aggressive fiscal spending in the second half of this year. This means that the fiscal policy would take the lead in the second half of this year to support the economy, and it means that it could ease pressure on monetary policy. So Bank of Korea might expect this, and that's why I expect the BOK would cut interest rates just 25 BPs, even if the growth performance requires more than that.
Bloomberg Economics' Jen-Hsun Kong there in Seoul ahead of that decision that we usually get in about an hour's time from now, but we'll be getting more analysis when it comes to what that rate path looks like after this cut today. That's expected. The broader outlook for South Korea's economy. Morgan Stanley's Kathleen will be joining us over the next hour. More ahead on the Asia trade. This is Bloomberg.
Well, we got a whole bunch of engines firing right now. The biggest one, of course, is the reasoning AI inference. The demand is just off the charts. You see the popularity of all these AI services now.
It's Nvidia CEO Jensen Huang speaking after their upbeat earnings report. And obviously, Nvidia's suppliers and peers will be in focus in Asia, with the results from Nvidia coming in very broadly in line with what was expected. $45 billion in revenue in the second fiscal quarter, and that's despite new export restrictions costing the company about $8 billion in Chinese revenue. Jensen Huang did outline plans to fill that China-shaped hole in the balance sheet. Of course, Nvidia faces scrutiny in China, where regulators are still investigating the company's compliance with US export controls. When the market opens in Seoul and Tokyo shortly, do keep an eye on SK Hynix, Samsung and TSC in South Korea, also Advantest in Japan. And that's after that upbeat revenue forecast from Nvidia, $45 billion for the quarter, as mentioned. Well, the annual UBS Asian Investment Conference continues today in Hong Kong. Let's get over to the event where the China Show co-anchor David Inglaze is standing by with our next guest. David.
Yep, good morning, guys. I'm looking at my watch. It's barely gone 7:40 in the morning. I've had half a coffee, and our producers have decided, instead of tariffs, instead of earnings, instead of derivatives, they've decided, why don't we do quantum computing as the very first topic for David, 7:45 in the morning, slightly hungover. Nah, kidding, I'm not hungover. Michelle Simmons is here with us, founder and CEO at Silicon Quantum Computing. Okay, my brain is barely working, but you're going to help. You're going to help me through this. You're going to help me through this. Tell us about what you guys do, and what makes you guys different.
Yeah, look, so we're Silicon Quantum Computing. We're a full-stack quantum computing company based in Sydney, Australia. We are focused on making the highest quality qubits, but in the most effective way to manufacture at scale, to get a commercial scale quantum computer as soon as possible. So just to put that in context, we decided right at the beginning that what you scale matters. So we chose the smallest physical system, atoms, in silicon. Atoms have the highest quality qubits, so you can scale them very easily with fewer number. But then we also chose the silicon platform and decided that we would control the manufacturing and manufacture with atomic precision. So we literally put atoms in place in the silicon crystal. The smaller they are, the higher the precision that you have, the higher the fidelity of the algorithms, and the more effective it is to make a full-scale system. So we manufacture with 0.13 nanometer precision. That is 20 times smaller than TSMC. And if you look at TSMC, they've gone from 3 nanometers to 2 nanometers with hundreds of millions of investment to drop that scale. We are 20 times smaller. We control the manufacturing. And right from the get-go, we knew that if you control manufacturing, you can get products faster. You can iterate the manufacturing faster too.
Okay, so you need pretty small hands to be able to do that. So what's the application? So currently, you guys are commercial. What's the application? Talk to us about the real world uses right now from your corporate customers at the moment?
Yeah, so look, it's important to highlight that atomic precision is something that if you can manufacture quickly, you can actually identify products ahead of time. And so the big game in quantum computing is to make a fully error-corrected quantum computer that can solve many, many types of problems right across different industry vertical sectors. But we, in the meantime, have realized because we can manufacture with a 1-week cycle time compared to most conventional foundries, which are 16 to 40 weeks, that we saw the machine learning field come along very quickly, and we pivoted to make our first product, which is available now, in the quantum machine learning space. And so what that does is a feature identification. It allows us to enhance the accuracy of machine learning, and we've had customers over the last 2 or 3 years using that system.
So give us an example, for example, of detecting fraud, that sort of thing.
That's right. So we've got people in the transportation sector looking at congestion.
Okay.
So to identify ahead of time, so it's a time series prediction when congestion is going to occur. In the banking sector, we've been looking at identifying fraud in banking. So you've got lots of disparate data sets, and identifying fraud is a big industry for them. And in the telecommunications sector, we've looked at outages in the network. So again, lots of disparate data from different networks. With our system, we have time series prediction, and we can tell when the outage will occur.
We had this conversation just before we started. How about things like earthquakes, for example? What type of data do you need? Random data, predictable. At some point, there will be a time series of data,
That's
for
right.
example. So can you predict, for example, do you see us being able to somewhat predict things like earthquakes with this?
So I think that's the kind of application that we're definitely looking at. So if you look at data sets where there's not a lot of data that's out there, but you have a time series data, what we can do with quantum states is we take that through a quantum system, it rapidly expands that data, pass it back to conventional machine learning, and because it's got more data to learn from, it can predict things in a more accurate way. So we're very excited about literally every industry needs that predictive ability.
Yeah, and I'm sure a lot of people are listening right now and they're wondering, how do I get started? When you start to engage your potential users and potential users of the technology, what are the first questions they typically ask you? And why does it matter to me, for example?
Yeah, so look, identifying the application use cases means that you have to be able to offer a product that they can actually try out.
Okay.
So in the company right at the beginning, we realized just making the hardware is not enough. You have to build all the software layers that control it, and you have to make it accessible. So we've made our system accessible through the cloud. So it's on premise at in our company at the moment. People use it through the cloud, and then we work with them as what their use cases are. And we go in their organization, identify several different use cases, and then we literally are doing them one by one. And what we found is that the more we do stuff, the more people want to buy the systems, and we've got an immense customer demand at the moment to get access to these systems straight away.
Right, and so far I think we've also talked about this too. And so far it seems like this is a wholesale application to big corporates. At some point in the future, do you envision, in the same way that people thought that personal computers were for big companies and they filled big rooms, and at some point do you ever see an individual having their own version or access to quantum computing?
So look, if you look at the classical industry, obviously people didn't predict that at the beginning, and eventually it came. I think quantum's going to have a very similar journey. At the moment, we're making it accessible through the cloud, so people can use it directly, but we have got customers that actually want to buy them and put them next to their data centers. Okay. And so we do think that is going to be a route as well. So we've got huge demand, both cloud access and direct buy.
And as with someone like you guys that are at the very frontier, really, if you think about this, what do you think are the increments moving forward? How do we move the curve forward on the application and the technology itself?
Yeah, so again, if you look at the classical industry, we saw it evolve for 50 to 70 years, get better and better every year. Quantum has been slightly unusual in the fact that when we started showing that quantum was feasible back in the late 90s, early 2000s, a lot of people came up with algorithms, huge numbers of algorithms across the world, how you apply it. That gap is dramatically closing now. So for us, working directly with customers and getting them to use our first products is quite critical. Our first product is machine learning. Our second one is in the analog simulation. So we're the only company that can literally mimic the position of atoms and molecules within a material structure. And so that really allows us for the first time to understand how materials evolve and how they interact. So our second product, I think, will explode as well in the analog simulation space. But then the big goal is a fully error-corrected quantum computer that has applications from agriculture, transportation, code breaking. I mean, it's just every industry vertical.
I would imagine a company like yours would need scale to meet if demand, and hopefully if demand does explode. Are you raising money?
Yeah, we're out raising at the moment. So we realized that our first product, it was actually 4 years ahead of our roadmap. We predicted 2028 for our first product to come out. Okay. It came out in 24. We've been testing it with customers over the last 18 months. There has been, without us even releasing it, there has been huge demand to get access to that. So we're raising now so that we can take our manufacturing, which is globally unique, take it away from our existing company, spin off a separate manufacturing site so we can actually build that first product separate from our main line, and then start to move to Asia and to Europe and to America.
When my producers told me I was doing quantum, do people shut off when they hear the word quantum? And can you tell when people shut off, when they stop understanding what you're saying?
You do see it. So I think one of the challenges of the field...
Did it happen now?
It hasn't happened yet,
Okay.
so David, you've been very good. So no, so typically people are, they hear the word quantum, they think it's going to be complicated, so they kind of disengage.
Okay.
And I think one of the big dangers of the field is people will rely on what other people think, and they won't go to the effort to do their own due diligence and understand exactly what it is. So my advice to people, if you want to get into this field, is to engage with people that are doing it, who are willing to share it, and to let you try their products directly.
Fantastic. Thank you so much for the time. Michelle Simmons, their founder and CEO at Silicon Quantum Computing. Haidi, back to you.
David Inglis in Hong Kong, for someone who's so worried that it's too early to be talking quantum, that was such a great conversation. We're going to have more of these conversations coming up from the UBS Asian Investment Conference. UBS Japan equity strategist Nozomi Moriya will be joining us in the next hour. Much more ahead here on the Asia Trade, though. This is Bloomberg. Take a look at what we're watching when it comes to trading in US futures. Of course, a lot of news flow, both from the deemed illegality of President Trump's global tariffs by the US Trade Court, some of the news flow when it comes to the blocking of Chinese visas or the revision of what's sort of eligible for visas from applicants from China and Hong Kong, as well as what we heard from the Fed as well. Some of that uncertainty in terms of what the rate path going forward is also informing what we're seeing at the moment. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens. Pretty uneventful morning, Paul, in terms of what's transpired. I'm trying to remember, we were sort of looking at the Fed minutes to begin with, and that just got very quickly superseded by all of the stuff when it comes to Chinese visas, student visas now being called into question. But this US International Trade Court really pushing back against the legality of Trump's reciprocal tariffs.
Yeah, the news got a very short shelf life at the moment, doesn't it? It's almost certain that the administration is going to appeal that. There will be some sort of pushback here, but for now, the uncertainty around tariffs itself has become uncertain. So plenty of catalysts for markets to trade on this morning.
Yeah, certainly. And we did see that sort of upsurge when it comes to sentiment. Of course, it is a complicated picture in terms of the implications for these markets, given that, in a sense, it does add sort of more uncertainty. We know that President Trump has sort of stepped back and put pauses on some of these reciprocal tariffs, including that détente with China that is still sort of on foot. Whether that now gets affected by sort of some bad blood with these Chinese student visas, we'll be waiting for Beijing's response. Certainly they responded just around 13 hours ago to the previous moves in terms of questioning these visas, particularly when it comes to applicants that have party membership or are working in critical industries. Taking a look at what we're seeing as a setup in Japan looks pretty positive at the moment. Dollar yen holding at that 140, almost 146 level now at the moment with that tariff news. Take a look at Korea, though, because that's sort of one of our main focuses today, with that Bank of Korea decision expected, Paul, to come through with another cut. The path forward perhaps a little less clear.
We didn't even mention that little company, Nvidia, that also reported today as well. So that's likely to be a catalyst for some of those chip makers also. Now, if we take a look at how we're tracking here in Australia, early going here, so we're just to the good by a few points. So we had a pretty positive bond auction for the 5-year, so that might see some support for bonds as well. There you go, you've got the 10-year yield. Well, it's just ticking up ever so slightly at the moment. The Aussie dollar kind of flat right now, Heidi.
And as we mentioned, our top story really out of all of the sort of frenetic news flow this morning is that the US Trade Court ruling that President Trump's global tariffs are illegal. It blocks a key pillar of his economic agenda. Let's bring out China correspondent Min Lo in Hong Kong. So, Beijing's response will be very, very interesting, right, given what we've heard so far this morning and given that this sort of fragile détente is already on foot.
Yes, I mean, of course, it is a lot of uncertainty going on because theoretically it means that all these tariffs are going to be put on hold for now, but we don't know for how long because it is almost certain that the U.S. administration is going to challenge that court ruling, maybe in an emergency appeal, possibly even as soon as tonight. How long that process is going to drag on is the big question here. But of course, we already see those market reactions, right? Those haven currencies losing a bit of steam, including the yen, and risk appetite returning a little bit. You're seeing U.S. futures climbing, but that momentum may fade off after a while. And for now, the U.S. courts are saying that that Trump has wrongfully invoked this emergency law in order to justify his levies. And Trump is also facing a lot of challenges, a wave of lawsuits as he signed those executive orders and really tested the limits of his presidential power. He's also being challenged on things like slashing federal spending, despite having Congress approve some of these budgets already, as well as things like restriction on birthright citizenship. And of course, now there is that issue of revoking visas for Chinese students as well.
Yeah, let's get a little bit more on that. Has there been any reaction from China so far, and where is this headed? Is this another negotiating tactic, or is it more enduring?
Yes, so the latest news just broke not too long ago. We haven't gotten any response from China, but it's almost certain that we are going to hear something strong from China today at the Foreign Ministry briefing at 3 p.m. local time. It's possible that China could retaliate with some sort of tit-for-tat response, or I mean, of course, interesting to watch whether they will hold back any retaliatory moves for now and what the tone will be from the Chinese government. But yesterday, after the whole Harvard incident, we had the Chinese government responding, calling on the U.S. to protect the rights of international students and ensure that education is not disrupted. Of course, this is already trending on Chinese social media. A lot of Chinese people, parents and students are going to be very concerned, especially for students that are already in the U.S. What does it mean for them? Will they have to leave? How soon do they have to leave the country? Of course, a big sort of economic and cultural impact here that will lead to a drastic reduction in people-to-people exchanges between U.S. and China.
All right, Bloomberg's China correspondent Min Lo there. Well, let's get to one of the other big stories that got somewhat buried by the news avalanche this morning. Nvidia shares are jumping in late trade after it soothed investor fears about a China slowdown by delivering a solid sales forecast. CEO Jensen Huang told us the AI computing market is still poised for exponential growth.
Well, we got a whole bunch of engines firing right now. The biggest one, of course, is the reasoning AI inference. The demand is just off the charts. You see the popularity of all these AI services now, ChatGPT, Gemini, so on and so forth, Grok. I mean, they're just doing incredibly well across the board. And all of the APIs that they serve out and all the agentic AI services that are built on top of them, they're all doing incredibly well. I think that there's just a giant breakthrough in AI's capability, and inferencing has just become a giant workload. Second, people realize that Blackwell is just a home run. NVLink 72 is a home run architecture. We designed it to be a thinking machine, a reasoning AI system, and I think people now, the confluence of the breakthrough in reasoning AI and the availability, now the emergence of Grace Blackwell NVLink 72, perfect timing. I think that's at the core. A big part of it. And the second part of it is that our supply chain is growing and we're really ramping it up and they're doing fantastically for us. And so all of these things are all coming together.
And so it is fair to say that some of that additional supply on Blackwell and the demand for Blackwell kind of made up for the opportunity lost in China, at least in the outlook for this current period?
Yeah, I guess so. But, you can't underestimate the importance of the China market. This is the second largest AI market. This is the home of the world's largest population of AI researchers. And we want all of the world's AI researchers and all of the world's developers to be building on American stacks. And so, irrespective of the near-term revenue success that we have, we can't ignore the fact that the Chinese market is very important.
You explained, again, in some detail, that at least in the Hopper architecture, you have engineered down to the lowest spec possible. It's not possible to do anything different with Hopper for the Chinese market. But in your consideration for a different architecture or a chip for the Chinese market, is that what we're talking about, a new design or new class? And have you made that proposal to the administration, just designing from the ground up a new chip?
We're still thinking through that. They're just the limitations are quite stringent, quite limited, if you will. H20 is as far down as we could take a hopper. We don't know how to make it even less, and so that's really the limit. So there are main, the limitations are quite stringent. So we have to really think through it. Whatever we make ultimately has to add value to the market.
Of course, that was the Nvidia CEO Jensen Huang there speaking with Bloomberg Technology co-anchor Ed Ludlow. Let's get more on Nvidia's earnings, the tech outlook. Let's bring our Bloomberg Intelligence senior semiconductor analyst Kunjun Sobhani. So Kunjun, what sort of jumped out at you in these numbers as well as the conversation that we've been had with Jensen Huang?
Yeah, I mean, if you look at the numbers, they came in pretty strong despite a significantly large headwind from the China H20 ban. If you remove that impact of H20, this would have been a blown out quarter with the beat and the outlook beating by about 7% and 10% respectively on an apples to apples pre-ban consensus number. So, which is pretty huge. They haven't beaten by this magnitude over the last 5 quarters. But what more importantly, what it suggests under the hood is that the Blackwell came in $3 billion above what the street was expecting, both in 1Q and 2Q.
Jensen Huang, of course, talking about how they are working hard in other markets as well against the backdrop of the US tightening China chip curbs. It's very hard to replace China as a market, though. What's the future hold in this regard?
Yeah, I mean, one thing we were expecting out of today's call is them announcing that they're working on the new variant and timing around it or magnitude of revenue, how much they can claw back out of that $15 billion that is supposed to be lost for this year. That didn't really happen. There were some hints that might be coming soon, but we don't expect that to be of a magnitude to claw back a lot of that revenue. One reason they did clarify that the compliant chip will not be as competitive, and we have already seen the Huawei ascend at the chip level and at their matrix level being significantly competitive. So this really sort of makes them to lose out competitively, both on performance and price perspective from the China market.
All right, Bloomberg Intelligence senior semiconductor analyst Kunjun Sobhani there. Let's take a look at how some of Nvidia's key suppliers and peers are tracking in Asia. Perhaps not surprisingly, we're seeing a fair bit of upside there for most of those big names there. It's just Samsung that's off the pace by a little, about 1/5 of 1% there. Well, let's get to Garfield Reynolds now, who leads our Markets Live coverage in Asia. Garfield, no shortage of things to talk about today, but let's start with that decision out of the US potentially blocking President Trump's tariffs on other countries. I mean, where is this heading? An appeal almost certain to begin with.
Yes, the Trump administration will appeal. You mean the decision as it reads, I was just looking at it now, specifically voids the tariffs that were introduced on April 2, saying that the IEEPA, the Emergency Act that was cited as justification for it, does not cover this, that Congress cannot give untrammeled power to the president to set whatever tariffs he feels like. So if that stands, then all of a sudden there's no tariffs. They've gone away. I tend to suspect that that's too simplistic a way of looking at things. President Trump has shown an extreme commitment to using tariffs, and I don't think a court ruling is going to stop him. Even if you could get a court ruling like this to stick and the Supreme Court to uphold it and the administration was to obey those rulings, then he'll just try and find some other way. So in the short term, markets are taking this as a very big positive. Equities are rallying, the dollar is rallying, bonds are selling off. That all makes sense if you think that this court ruling is going to lead to a noticeable decline in tariff rates imposed by the US. What's more likely is that this will lead to further increases in the uncertainty regarding this policy, and ultimately we will get at least these 10% tariffs. Apart from anything else, if the US doesn't get those tariffs at the 10% or so level, then the entire strategy of the big, beautiful bill for cutting taxes and boosting spending in particular areas without blowing an irremediable hole in the budget falls apart, because that relies over the longer term on sustained revenue from tariffs to help to fill that hole. So I don't see that the Trump administration is going to let go of tariffs as an instrument. It just means that in fact it's going to be a more difficult, more complicated path to whatever level of tariffs we end up as having as the sort of the final resolution.
We've just heard from Elon Musk that his scheduled time as a special government staff has come to an end, maybe a little bit early, given we might see more cost pressures on the government, right? But a lot of the asset reaction makes sense. I do wonder, do you think this is enough to kind of rescue the long end of the bond market?
No, well, it's actually going to put more pressure on the long end of the bond market, precisely because you look at what stocks are doing, you look at what the dollar's doing, that's a sign that investors are revising upward their expectations for US growth, which makes sense because the tariffs were seen as overwhelmingly lowering US growth first and foremost. It was seen as a hit to global growth, but the particular impact on US growth because you're effectively taxing the US economy. So if tariffs go away, that's a plus for US growth. And as I said, there's also this concern about what happens with the balancing act on cutting taxes but not blowing a hole in the budget. So all of those concerns actually become greater for bonds. We've seen global bonds in a pretty fragile state as it is. For now, US Treasury yields are up about 3-4 basis points. At least they were about a minute ago when I last looked. That's nothing too concerning, but this is a market, both Treasuries and elsewhere, especially be keeping an eye on JGBs, where yields have shown the tendency to take off and keep on going. If that happens, that could cause lots of problems. And again, I think there's kind of a lose-lose situation for bonds. They will move, yields will move up slowly if we do indeed see tariffs being reduced so that the growth outlook globally is better. If you get a confrontation between President Trump and the courts over this ruling, we get more policy uncertainty. That's going to be that's going to again feed concerns, particularly at the long end, about the sustainability of the debt burden and about the wisdom of investing in US assets at a time when things are becoming less and less certain.
Kathleen Reynolds, who leads our Markets Live coverage in Asia. We do have more ahead on the Asia trade. This is Bloomberg. Going back to our top story, the US Trade Court has ruled that President Trump's global tariffs are illegal, blocking a key pillar of his economic agenda. Let's bring in Hinrich Foundation Head of Trade Policy, Deborah Elms. And Deborah, really thrilled that you could join us at late notice to talk about something like this on a day like today. Tell me, were you surprised by this decision? How meaningful do you think it will be? Will the White House simply find ways to operate around it?
I think it's not necessarily a surprise. It could be very meaningful, and yes, the White House will do its best to find a way around it. So I think this is another turn in what has been a crazy set of trade policy actions by the Trump administration in the first 4 months in office.
Indeed. Do you think that it will sort of dissuade any sort of further attempts, given how core tariffs, the trade war has been to his broader economic agenda, to his geopolitical agenda as well, and how successful will the administration be in being able to use other ways to circumnavigate this decision, which essentially says that he can't use these emergency powers to do this?
He can't use the IEEPA Emergency Powers Act, is what the court said today. Now, that ruling has already been appealed, and so the subsequent decisions may overturn this decision. So we should stay tuned for what happens with IEEPA tariffs. Those are the ones that were applied against the Canadians, the Mexicans, and the Chinese on his first day for fentanyl purposes. There also it's the statute that was used for his reciprocal tariffs on April 2nd. Those could be upheld. They could be overturned. We'll have to see what happens. But in the meantime, he has a number of other tools, including the one that he's used to already impose tariffs against all kinds of metals, steel, aluminum, and other kinds of metal products, also autos and auto parts. And they've been preparing for an assessment using the same Section 232 statute for pharmaceuticals, for semiconductors, critical minerals, lumber, et cetera. So he has a lot of tools in his arsenal. The court has just told him that he's not supposed to use this particular tool. But Trump being Trump, he's a big fan of tariffs, and I think this is not the end of that tariff story.
Well, it certainly isn't, because there's other cases pending as well. What more do we know about those cases? And perhaps is the most accurate thing we can say is that this is going to be churning and uncertain for many months to come, potentially.
Well, I already would have argued that trade and tariff policy by the U.S. was going to be uncertain for the rest of Trump's term in office. So this is not necessarily new, but it is a blow. It's not unexpected in that the first time that he announced that he was planning to use IEEPA, there were a lot of trade lawyers in particular who were saying, but this statute doesn't actually appear to apply to this particular use. You have to declare an emergency, which is something, it can't be a trade deficit that's been pending for a long time, and it doesn't authorize the direct use of tariffs. And so there were lawyers from the very beginning who said this seems like tenuous use of IEEPA. But that, again, as I mentioned, there's a lot of often obscure, sometimes less obscure, ways in which the president can impose tariffs. And I might add, at any point, Congress could simply authorize tariffs as well. I mean, the part of the reasoning behind the court striking down IEEPA in this case is that he had overstepped congressional authority. So I could imagine that there will be a potential push in Congress to make these tariffs or make the use of tariffs a tool that is allowed by Congress, directly authorizing the president, Trump, to impose tariffs.
And we've just heard that President Trump, completely unsurprisingly, does plan to appeal that trade ruling blocking global tariffs. So, that was widely anticipated. So that appeal already in the works. Deborah, if you were representing a country that was a target of the US tariffs, what's the strategy now? Do you continue going ahead trying to negotiate something in good faith, or is this the perfect opportunity to say, look, we're just going to suspend things, ask for an extension, sit back and wait and see?
I suspect we will see a mix. There will be some countries that will continue with the discussions because if this ruling today is overturned, or if it is as a stay and the tariffs continue to be in force, or at least potentially in force, many countries will say we can't take that risk. We'll have to proceed as if they are coming and negotiate our way out of that. Others will say this is a perfect opportunity for us to say the legal rulings inside the United States are too unsettled. We will suspend our discussions, or we'll at least slow walk our discussions until we have more clarity. So I think we're going to see, just as we have been seeing, honestly, a mix of reactions by governments about how they handle this particular tariff uncertainty.
How Beijing handles this will be particularly interesting, right? We know that the détente is on foot, but how fragile that is will be quite interesting, given that we've also seen these new restrictions on Chinese students and Chinese student visas as well, which cannot please Beijing. Given that Xi Jinping has had success playing hardball so far, do you think he would take this and see this as an opportunity to wait for the domestic pressures to kind of exert their maximum on President Trump before conceding any further?
Well, I think the slight advantage that Beijing has over others is that Beijing has a 90-day window that is now, we just started that 90-day window. So they've got a little bit longer before officially the tariffs are supposed to snap back. Not all the way to 145%, I should note, but up to 34%. So it's bad, but not as bad, and it's still quite some way off. The problem is the other countries that are in line for these reciprocal tariff decisions, those are supposed to take effect in early July, and so that timeline is much shorter. And it requires you to decide, really, as a country, do you think that this ruling is ultimately going to be overturned? If it's not overturned, will it go into effect as intended? And if it goes into effect as intended, is it worth negotiating over? Because, you're not certain what are we actually arguing about? Are we arguing about reciprocal tariffs? Do these get converted to sectoral specific tariffs? Do they launch Section 301, unfair trade practices, which is another statute that the Trump administration used the first time he was in office? Yep. Do they use another obscure ruling that allows the immediate imposition of tariffs? There's a lot of
unfortunately
options
out of time.
that the Trump team could use.
Deborah Elms, Hinrich Foundation, Head of Trade Policy, thank you so much for joining us. And as we mentioned, the Trump administration has already filed notice of appeal with the US Trade Court. We have more ahead on the Asia trade. This is Bloomberg.
Take a look at European futures at the moment as, of course, we continue to see that market upside when it comes to risk assets reacting to that blocking by US Trade Court of Donald Trump's global tariffs. We have just heard in the last few minutes, as expected, the Trump administration saying it will appeal that tariff ruling, that it has filed the notice of appeal with the US Trade Court. So by no means is this sort of the end of the saga. We also do know that European trade negotiators are set to meet with their US counterparts on Thursday. They're still trying to fast track that trade deal there. This is Bloomberg. Take a look at what we're seeing when it comes to Asian markets. Whether or not this sort of enthusiasm is sustainable is sort of not really a question for today's session, it seems. We're seeing really Korean stocks as well as Japanese stocks. A little bit upside here in Australia as well, but certainly momentum when it comes to the bullish side. The positivity when it comes to risk sentiment in the short term coming from this key development in the global trade war, taking a serious knock in terms of Trump's tariffs. Of course, we have just heard, as expected, the administration will be appealing that decision that has already been filed, but whether or not that makes a difference kind of in the short-term positivity that we see, we continue to watch these markets very closely. We're seeing US stocks futures jumping, the dollar also strengthening there as well. A lot more pressure being put on the longer end of the bond market, particularly after the weakness that we saw in that 40-year JGB auction yesterday. But for more, let's head back to Hong Kong now. The UBS Asian Investments Conference is underway with David Inglis and our next guest. Dave.
Yep, Heidi, good morning. Thanks for having me. Yes, we're talking Japan right now here. Joining us here on set is Nozomi Moriya, of course, who covers Japan, of course, for UBS. And we're here, of course, live at the UBS Investment Conference. Good morning.
Good morning.
Nice to see you.
Yeah, nice to see you.
You're here for a couple of days.
Yes.
You're meeting a lot of clients. It's getting very busy. What's the number one question that you're getting from clients?
Yes, investors are interested in, of course, tariff impact now.
Tariffs again, okay, but yes, okay.
And recently I received more questions around the impact of the long-term interest rate hike of the JGB. And in addition to that, I feel positive that many investors keeps the interest into the Japanese corporate actions through the corporate governance reform in this marketing as well.
Okay, now maybe on the tariff impact. What's your base case assumption on what happens and how does it affect your projections?
Yes, and we are expecting that the tariff impact for the 10% universal tariff could continue toward Japan, and we also expect that some sector tariffs like auto and steel could continue. So this could hurt the earnings of the Japanese exporters like auto sector, steel sector. We are concerned about that, while we are constructive about the outlook of the Japanese domestic sector, which are less affected by the tariff impact.
Right, and the other issue that you mentioned is this. The market's been talking about the JGB market a lot. The long end interest rates have been going up. We've seen not very strong auctions coming through. I think the 20-year, the 40-year this week. I think we have the 5-year. I think I could be mistaken, but in any case, what are the positives and negatives to that? Let's put it that way.
Yes, I'm not that concerned much about the direct impact on the Japanese equities because Japanese corporates in general have very strong balance sheet with net cash positions. So the rate hike itself should not be directly negative for the Japanese corporates. However, we need to watch the progress of the currency because the stronger Japanese yen affects the earnings of the Japanese exporters. So in that context, I'm watching. But at the same time, the stronger yen is positive for the Japanese domestic demand because it will lower the imported costs.
Okay. So, and what assumptions are you making there on the Japanese currency this year, and maybe let's look at next year too?
Yes, we are expecting the 130 yen over US dollar, so the further yen appreciation toward the end of this year. Okay. But we are expecting the same level, 130 yen over US dollar at the end of next year as well. So we think that there should be more stabilization of the currency market into next year.
So near term, do you think the stronger currency will be a near-term challenge for Japanese exporters and the market? If you could just outline that for us.
Yes, if you look at the Japanese equities, stronger yen should be the pressure for this year. But I believe that Japanese corporates will adjust to the currency level and will continue to do more effort in the corporate reforms. That's why I'm more constructive into next year.
Now, in terms of, you mentioned some of the sectors right now as tactical opportunities that you guys prefer, domestic sectors. If you could elaborate more on why you prefer domestic-oriented and which specific sectors that you think are opportunities right now.
Yes, in addition to the less risk from the tariff or the global macro uncertainty, we are also seeing the Japanese domestic structure change, including the wage increase and also the inflation shift. So that's one of the reasons we prefer the domestic sectors, including consumers. And we also like real estate sector and the IT service sector.
Now, on inflation and the consumer-facing sectors domestically, domestic-facing consumer sectors, are you noticing margin trends, for example? Are they able to raise prices internally? And do you think that there is consumption, there is the appetite right now to absorb those higher costs from the inflation perspective?
Yes, the corporates, the consumer companies are trying to raise the prices to cover the cost hike from the wage increase. Yes. So we definitely see the changes from the corporate attitude. When we look at the Japanese households are still very conservative because the real wage is still not growing much. The inflation is higher than the wage growth, so Japanese household consumer sentiment is still not that great yet, but we expect that the real wage to turn positive into the latter half of this year, and it would help the improvement of the consumer sentiment.
And what does it mean then for these rate hikes that many expect the Bank of Japan to deliver this year? Do we get a rate hike this year?
No, we expect some pause by BOJ this year under this global macro uncertainty. But into next year, we expect the BOJ to resume the rate hike from July 2026.
So they're on pause for at least a year in your base case.
Yes, because we are cautious about the not about specific about Japan, domestic. But global macro.
Okay, and how does that dovetail then into the index targets that you guys have? So you guys are, do you think we'll retest the highs that we hit back in right before the carry trade unwind? I think it was back in late July, 29, I think on the topics, just over 42,000 on the Nikkei. When do you think we will retest those levels?
Yes, in the long term, into 2026 and 27, there should be the potential to retest. But in this year, I remain cautious for the Japan equities based on the assumption of the stronger Japanese yen and also the global macro uncertainty.
Did we miss anything that you think is important? What else do you think we should be paying attention to in Japan?
Yes, I would like to reiterate that even though I'm concerned about the near-term macro uncertainty, I would like to reiterate that the Japanese corporates are doing a lot of effort to improve their profitability, focusing more on the shareholder value creation. So that's the main reason I'm constructive in the longer term.
Are there certain sectors, by the way, that stand out to you in terms of the corporate governance exercise that's taking place there?
Yeah, we are seeing the a lot of improvement over the this is not only happening in the one sector. We are seeing a lot of changes, but these changes are mainly driven by the large companies first, because when the large companies take action, it has a good influence for the other companies, including relatively smaller size companies, through the peer pressure, which is quite important for the Japanese corporate culture.
Yeah, we know about peer pressure from school, and it tends to work. Thank you so much for the time. Nozomi Moriya there, of course, Japan equity strategist at UBS Securities. Paul, has peer pressure worked in you ever?
It depends on the situation, David. In this case, no. David and Glaze in Hong Kong, thanks for joining us. Look, we've got more exclusive conversations coming up from the UBS Asian Investment Conference in Hong Kong, including the bank's co-head of wealth management for Asia Pacific, Amy Lowe, coming up in the next hour. Let's take a look at how Asia chip stocks are performing, particularly those related to Nvidia. We're seeing some of the gains we saw for SK Hynix a little bit earlier, perhaps backing off a little. The stock's still better by about 0.8%. Samsung was in negative territory. Now let's call it pretty much flat. Of course, Nvidia had a set of results, came in line with estimates, forecasting revenue of $45 billion in the second quarter, and that's even after losing $8 billion in revenue due to China restrictions. And the CEO Jensen Huang saying that Chinese AI rivals are rapidly filling the void left by the departure of US companies from the Chinese market. Well, Nvidia's earnings also shine a light on the energy demand outlook as data centers multiply around the world. BloombergNEF's latest new energy outlook report suggesting that demand will probably be met by dirty energy sources. Let's get the details now from Seoul and BNEF APAC Head of Research, Ali Izadi, who joins us. So, Ali, what is Bloomberg New Energy Finance's view on electricity demand growth for AI data centers?
Thank you for having me. So our team estimated that in 2024, the annual demand from data centers was equivalent to around 371 terawatt hour. To put this in context, that's roughly equivalent to Indonesia's annual electricity consumption last year. So about 1.4% of global electricity consumption last year. By 2035, we expect that number to rise to just shy of 1,600 terawatt hours, so over 4 times the level last year. Again, to put that number in context, that would be equivalent to electricity consumption of Japan and South Korea together. So we would be adding basically an equivalent of Japan plus Taiwan between now and 2035. By market, though, in absolute terms, obviously the US, China, and Europe would be leading. If you look at annual share of electricity demand that's going to be driven by AI data centers, then OECD markets would have higher shares, partly because these are the markets that actually don't have any other sources of significant growth for electricity demand. Particularly, they all have maturing demographics, in some cases even declining populations, but also an economy that's more and more less energy intensive.
What about the correlation when it comes to levels of emissions?
Yes, so to answer this question, we ran our models with and without the additional demand from data centers. And under our economic transition scenario, where we're not trying to optimize for climate goals, we just tell the model to build the least system cost possible without taking into account any sort of additional carbon pricing. What the model did was to meet that incremental additional demand. About 40% of the additional generation came from renewables and clean sources, but the remaining 60% came from fossil fuel thermal power plants. In markets such as the US, gas was the clear winner, whereas on the other hand here in Asia Pacific, without more policy intervention, then coal would become the clear winner in meeting more incremental demand from data centers.
Well, we're less than 6 months away now from COP30 in Brazil. Are countries setting more ambitious reduction targets for 2035 as they are required to do so by the Paris Agreement?
So the short answer is no, unfortunately not. Most countries missed the original February 10th deadline. Now they've been given an extension until September. As of today, among the G20 members, which account for about 3/4 of emissions, only 4 of them have submitted their 2035 targets. Those are the UK, Brazil, US, and Japan. Now, their targets are quite ambitious, but for example, in the case of the US, the target was submitted under the Biden administration, and the Trump administration, of course, has no intention of following through with that target. In other cases, we haven't even seen more ambitious targets yet, let alone action to follow through with the targets.
Our Bloomberg NEF head of APAC research, Ali Izadi there. Take a look at some of the stocks that we're watching when markets open in Taipei in the next hour. Watching a lot of these tech and chip-related stocks, right? The likes of TSMC, Honghai, other chip makers and semiconductor suppliers in Taiwan, given that we've had all of that narrative, including a solid result from Nvidia and the sort of ability to be able to counterbalance some of the curbs and restrictions and weakness out of China. Also some very interesting commentary from Jensen Huang saying that Chinese AI rivals have become formidable, sort of with or without those US curbs, but certainly broadly those results have eased concerns for now about the China factor, with a pretty upbeat sales forecast as well. So looking for upside in what is a broad market that is seeing upside in risk assets already, Paul.
Okay, Vietnamese tech tycoon Trong Jie Bin is leaning heavily on Nvidia chips as he invests heavily in AI. His company FPT has interests in software, telecoms, data centers and robotics. It's also venturing into education with the help of AI. Bin speaks to Bloomberg's Haslinda Amin on the latest episode of Latitude.
We buy machines because Jensen said every year the data for world doubling. Just 1 year, and therefore the world need to increase the AI computing by 2-fold or 4-fold per year. Nvidia, they said, only FPT in the world provide complete AI end-to-end solutions, and that is needed because everybody know AI is so important.
Are you getting all your Nvidia chips for your data centers?
Yeah,
that
really.
You need, all that you need?
Really, yeah.
And this is where those Nvidia chips are put to work. I got a tour of FPT's tightly controlled and very noisy Hanoi data center. This network of servers stores, processes, and distributes huge amounts of data. Demand for facilities like this is growing globally as the use of cloud computing and AI applications explodes.
Until now, you always think about Nvidia being the dominant player. You always think about the US being the dominant AI player. With DeepSeek, should you be viewing China and China's AI players differently?
Actually, not exactly this, because DeepSeek is innovation for democratizations of AI. Fundamental, still US.
This episode of Latitude with Haslinda Amin premieres at 8 p.m. Thursday Hong Kong time, 7 p.m. in Friday in New York. Let's take a look at how we're seeing key assets trading at the moment, even with that filing of the appeal from the Trump administration with the US Trade Court in response to the blocking of his global tariffs. Hasn't sort of taken much of the shine of this risk rally that we are seeing, despite, of course, the fact that it sort of adds even greater uncertainty to the broader trade and tariff picture. S&P futures at the moment up about 1.5%. We're seeing the dollar also extending some gains after what has been a period of weakness. The yen is also declining as well on that sort of risk on lack of demand for havens. Gold in particular falling for a fourth day after that decision as well. More ahead on the Asia trade. This is Bloomberg. Watching Korean assets as we see this broader risk rally across Asia and across European and US futures as well. Stocks really climbing. broadly across the region, and in particular, we are seeing some gains in South Korea. Of course, there's also the added boost from some pretty solid Nvidia results and a good sales forecast as well, really shrugging off some of the concerns over the weakness from China with these US chip curbs. We are watching Korean stocks in particular and assets very closely, given that it is also Bank of Korea decision day, where a cut is expected to support some of the growing, not just domestic, but also broader geopolitical and global risks facing that economy. Let's bring in Kathleen now, who's a chief career economist at Morgan Stanley. Kathleen, if you take a look at the inflation picture, well, we've seen some softness there. If you take a look at this Bloomberg chart, it shows that there is more scope for the BOK to be moving. On the other hand, though, household debt, perhaps some of the property market issues, is there more reason to continue easing at this point than those factors that might want them to be cautious?
Hi, of course. We're looking for a rate cut this morning, and as you mentioned, there are many factors to consider here. The BOK has to consider the growth concerns as well as the household debt and rising risks to financial stability. But at the same time,
Kathleen,
we're still
I'm going to
at a
jump in
level
at the moment because we do have that Bank of Korea decision, I should say, out a little bit early, cutting that policy rate to 2.5% from 2.75%. All 21 economists surveyed forecast that cut. So, Kathleen, I'm going to throw it back to you. Obviously, you're not surprised by this decision. I don't think anyone really is.
Yes, of course, we were looking for a rate cut here. And as I was saying, that we are still at a neutral rate range in terms of the BOK's alluded range for the neutral rate at 2.25% to 2.75%. So in that sense, with the growth concerns, the BOK has more room to go. And that's what probably had driven the BOK to make a rate cut this morning to 2.5%.
The presidential election is just 5 days away. How much risk do you see arising from the political uncertainty, given that a lot of the downside has come from the political uncertainty over the past few months too?
We are looking for a growth forecast revision downward here by the BOK this morning, which the extent of the cut would be very important for the investors to look for any hints on the terminal rate for the BOK. Political uncertainty has been posing a lot of downward pressure on the consumer sentiment, but we recently saw from the May reading that it's been actually rebounding pre-martial law level. And with the election, with the new government coming in, expectations of the fiscal expansion is likely to bring in more rebound on this sentiment across the consumers and businesses. So that should also put a bit of upside risk to the risk, the forecast that BOK might be coming out with this morning.
Yeah, and Kathleen, we are getting some of those forecasts now, and you're quite correct. The growth forecast has been cut, seen at 0.8% for 2025. That's down from the 1.5% projection in February. And for 2026, CPI seen at 1.8%. That's also down from the 1.9% estimate in February. Just wanted to get a little bit more, if we can, on your thoughts of the potential fiscal expansion that we might see after the election. Do spending plans from both candidates impact your forecasts around growth, inflation, and how the BOK might react in the second half of the year?
So looking at the number 0.8%, it does appear that the BOK has not considered the fiscal expansion story in the second half. And it's highly understandable given that we do not have the new government in place yet. So in expectations of the second half, the second supplementary budget, both of the candidates has mentioned around 30 trillion or even above the size of 30 trillion that could be possible for the second half. So if we do see that coming in the second half, the BOK's forecast could also be bumped up with the fiscal impulse that's coming in closer to 1%. What we're sitting right now at 1.1% for the year. So the fiscal factor could pose an upside risk to the BOK's growth forecast for the coming next forecast in August or even November.
We're seeing the won soften a little off the back of this decision as well. Considering all the variables here, what are some of the difficulties in forecasting the won at the moment? Where do you see it heading from here?
We are near-term neutral on the Korean won, but of course we're expecting the Fed to deliver rate cuts, although we don't see them doing it this year, but more of a story for the backloaded cuts next year. So over time, we are looking for a weakness in the dollar. So right now we're looking for more of a neutral level for Korean won at 1360 by end of this year, but more so at 1320 is where we're looking at by 2026.
Kathleen, of course, we had the decision from the US Trade Court and now the appeal from the Trump administration that the global tariffs imposed by the administration are illegal. How do you react to that in terms of the monetary policy function in Korea? Because it's not just sort of direct trade implication, but Korea as a barometer of global trade.
We do think the uncertainties around tariff does pose a high level of pressure on the global trade environment. And of course, Korea is highly exposed to that. And a lot of uncertainties still ongoing. And this overnight news has just exactly shown that there are still moving parts and things are very still fluid on the tariff front. For the monetary policy implications, again, that does pose increased uncertainties and increased downward pressure on Korea exports. Hence, we're looking for more cuts to come. And for us, we're looking specifically for 2 more cuts to 2% at the terminal rate by end of 2025.
Kathleen Oh, Chief Korea Economist at Morgan Stanley, as we see the Bank of Korea, as expected, reducing the cash rate by 25 basis points. Let's take a look at how futures are shaping up. We're seeing a bit of a bounce here for S&P E-mini futures, also Taiwan futures as well, higher. A whole number of reasons for this. We had those good results from Nvidia, but also the news that President Trump's global tariffs deemed illegal, blocked by a US trade court. We've already seen an appeal filed, so uncertainty shaping up as the word of the year at the moment. That is it from Asia Trade. Markets coverage continues in a moment.